Hello again, this is Alex with MasterChartsTrading.com, and this is market recap for Friday, October 7th, 2022. As always, please don't forget to hit the like button, subscribe to this channel, and share this video with others. Your likes is what keeps this channel going. Additionally, the way YouTube algorithm work is the more likes the video gets, the more higher it appears in the search results, and more people will benefit from seeing this video. So again, please don't forget to hit the like button. Looks like the bounce for stocks may have been quite short-lived, and it's possible that we're gonna see new lows pretty soon for stocks. Already we're seeing three sectors that hit new 52-week lows: real estate, staples, and utilities. And high-yield bonds have retested the recent support break from below, and so far have the support break has indeed held, so this is bad for stocks. Precious metals and dollar interplay is again, as well, we're seeing it again, so we'll see which one will win. It's possible dollar will again test the recent highs. Oil broke out above resistance on recent OPEC decision to cut production, possibly headed towards the $100 per barrel, and Bitcoin again looks quite vulnerable. If you are a subscriber, then stay tuned. We'll look at the stocks. For example, we'll look at Ross Stores, Travelers, Tesla, Walmart. We'll also look at some of the speculative stocks that we play, like ChargePoint, Las Vegas Sands, Revlon, Sunrun, and Wynn Resorts. So if you're not a subscriber, then follow the link in the video description and you will find me there, my site. Looking at S&P 500, so first of all, on this chart you will notice that I have four lines: this green, blue, red, and yellow line. These are my proprietary support resistance indicator lines. Again, you can find out more about them by following the link in the description of this video. Basically, I use them pretty much exclusively for trading, and you can too if you sign up. So the way I use the indicator lines is, if a stock has closed above the blue support resistance line, for example this S&P 500, and this is a daily chart, meaning that each candlestick is 1 day's worth of activity. You can see where I'm hovering. This is a TradingView.com interface. There are free TradingView accounts available, so you can create the free TradingView account and have these lines on your chart once you sign up on my site. Looking at this chart, this is S&P 500. S&P 500 broke out above this blue support resistance line, or I call it the new bull market, on April 29th, 2020. This was during the pandemic. We had one more opportunity right there in June of 2020 to get in on the long side, but that was about it. Stock market just kept going higher and higher and higher until quite recently, until January of this year. So technically speaking, back here in January was still a buying opportunity. However, it was not really very successful. And then eventually we unraveled, and here on April 29th of this year, 2022, we have entered a bear market. As you may recall, this was the time of invasion of Ukraine by Russia, and people thought that we're gonna, Ukraine will not stand and Ukraine will fold, Russia will take over the Europe, etc. However, Ukraine did stand, and nothing of that nature has happened. In fact, right now the opposite is quite true. As an aside, looking purely at technical trading, which is what I prefer to do, I prefer to ignore all the news. I prefer to look only at the chart. Looking at this chart, April 29th, 2022 was the date where we say, okay, we are no longer in a bull market, we are now in a bear market or a downtrend. From then on, we think, okay, we want to be selling or selling short. So where do we sell short? At what level? Notice that we made a new low around May of this year, and then we bounced. So we bounced exactly towards this red support resistance line, and this is exactly where we want to sell short. Again, we made a new low, and again we bounced. This bounce was really significant throughout the summer. We continued from 3600 towards 4300, which was about close to 20%, 18%, and this bounce was still huge. However, we did not reach this blue support resistance line where I'm hovering. The blue support resistance line was at that point at around 43.70. This, if we closed above it, if we moved above that line, I would have said, okay, with the bear market that started here in April is no longer with us, and we are now in an uptrend. We came very close, but we did not get that high. So again, we rolled over, and then we had a nice short signal right there on 26th of August. Short signals occur when we close below the red support resistance line after previously have closed below the yellow line. Did you follow that? If you didn't follow it, send me a message. You can actually send me a message here on TradingView. You can do private chat. I'm at MasterCharts. You can also go to my website and send me a message there. Contact me. Okay, so looking at recent events, again another short signal opportunity, or short selling opportunity right there, 13th of September, and new lows on October 3rd. So if you read some of the more fundamental reports from that time, people thought that, okay, this is it, we're gonna rally, and maybe this is the end of the bear market, etc. I was very skeptical. I wanted to see at least something. I mean, for me to say, okay, this is the end of the bear market, we needed to rally here from 3rd of October. We needed to rally this much. So that's like 22% or so. Clearly that did not happen. We rallied let me see how much we rallied so far. We rallied 6%, 7%. And again, we're very close towards new lows. So in fact today we can look at current situation. I like to look at S&P 500 contract for difference. The symbol is SPX 500 USD. This is live, so it's basically live futures, whereas ES1 exclamation point is a delayed futures. So notice this is a 4-hour chart. We can go to one daily chart. We might actually close at new lows. It's possible. I mean, the previous closing lows were through September 30th, but just the way things are selling, we're already 3% down. We're half an hour away from close, but it just doesn't look good, you know. So I thought we're gonna rally, you know, towards the red line. Again, at that point I'll be like, oh my god, we need to sell short. So something similar to what we had here August 26th, another opportunity right there, 13th of September. We haven't even gotten there yet, so it looks like we're gonna make new lows. So I just don't see it rallying higher. Here's Dow Jones. Again, this is what's called a short covering rally. So we had 3rd of October, 4th of October, 2 days so strong. Everybody covered their shorts. And then again, we're unraveling towards new lows. Does not look good again. I mean, anything is possible, but it seems more likely that new lows will be made. Looking at Dow Jones here. Looking at NASDAQ, it's also quite bad. I mean, looking at this previous low from 16th of June, we're gonna definitely close below it. Previous low was on October 3rd, when I don't think we're gonna close that low today, but the previous closing low was 30th of September, where I'm hovering right there. And today's close is gonna be below this 16th of June, so it just does not look good. Very weak. Notice how weak is NASDAQ. Notice this bounce, 1-2 days of bounce, high on October 6th. We didn't even get to this yellow support resistance line. Notice on Dow Jones we actually burst above it. Same goes for S&P. We actually came above it. But NASDAQ, with its technology heavy sectors, allocation just didn't even make it that far. So super weak. So NASDAQ is one of the weaker parts of the market. And there's Russell 2000 small caps. Generally speaking, very similar picture. Again, we bounced from the lows on 20th of September. Kind of found resistance at the yellow support resistance line. So I call this weak resistance, and this is strong resistance. So yellow line is a weak resistance, red line is strong resistance. That's when we're in a downtrend, and we're definitely in a downtrend. Looking at some of the sectors that also made a new low today, the weakest by far is real estate. Here's real estate, IYR. Big move lower and new lows today. So yeah, that makes sense. Higher interest rates translates into less real estate activity. I mean, people cannot afford houses because of the higher real estate rates, higher interest rates. So they're not buying. So people are lowering their prices. And real estate, IYR, also contains a lot of real estate investment trusts. So it translates into commercial property as well as just regular houses for people to live. So yeah, hopefully we'll see lower prices for real estate for people who cannot afford to live anywhere, really. And there's so many people are homeless here. I live in San Francisco Bay Area. I mean, the problem is huge. I was if you're familiar with San Francisco, I was there like a few days ago actually, and I have never seen it this bad before. Around, there's an area called Tenderloin, and I mean blocks and blocks of tents, people camping on the streets, just openly using drugs, everything just really dirty, a lot of dirt on the street, a lot of garbage on the street. So it's a big problem. People just simply cannot afford to live anywhere. I mean, in addition to all of the other problems like drugs, etc., that we have there. But I think the bigger problem is that if there's affordable real estate, then people at least can find a place to live, not tent, in the middle of the city. So this could achieve this result. It's a weird way of doing it, but it's one way of doing it. So let's see if Federal Reserve will actually create more affordable real estate prices, and the homelessness will decrease. Somehow I doubt it, but who knows? I don't know. Make a comment. What do you think? Weirdly enough, XLP defensive sector. So we got real estate, XLP as consumer staples is a defensive sector, leading to the downside. Notice new low today. It has companies like Procter & Gamble, Costco, etc., Pepsi, Philip Morris, Walmart. So people do shop, and they will continue to shop even if it's end of the world kind of thing. But yeah, it's one of the first to hit new lows after this short-lived bounce from the late September. I don't know. I'm not exactly sure why this is happening, but it is happening. So I mean, if the defensive sector is doing this, I don't see why the quote-unquote offensive sectors cannot do the same, such as such as technology or communications. Google and Facebook, etc. And again, I'm here in Bay Area. I'm already hearing about quite a bit of layoffs and at least hiring freezes on various high technology companies. So it's interesting. What are we headed into? Are we headed into a recession, or are we headed into sort of a depression kind of era? Again, make a comment. What do you think? And another incredibly defensive sector, and this is called utilities. And as I never get tired of saying, during a true bear market, you cannot hide in utilities. So bear market meaning everything, bear market in stocks meaning everything gets sold, all stocks, utility stocks get sold as well. Yes, they're defensive in nature, they pay good dividends, but they still collapse. Like with this, look at this, this was an all-time high on 12th of September. I was feeling really hopeful that, wow, this is really unusual for, one sector to be not in a bear market. And yes, notice what happened. We're seeing new low. If we look on the weekly chart, so weekly chart, what does that mean? So W, see, 1 week. So each candlestick is a week's worth of activity. Now, if you're using my indicators, then hover over this little settings button and change it to 52, because that's for weekly, 52 weeks in a year. So notice what just happened this week. XLU rather broke below this lows. You see, I'm just gonna draw a line. So a depth of this pattern is that much. You can say it's like 16-20%. Very reasonable estimate is to see see the same amount duplicated on the downside. So that's like 16, 17, 20%. So for utilities, we're looking at pandemic lows. There's the pandemic lows, or at least pandemic area of prices for utilities. It's another 20% down. However, utilities are usually not as strongly sold as, let's say, just regular stocks. So this could be a very conservative estimate. So if we get to the pandemic lows, I think for utilities, I think S&P 500 will be way below it already by then. So again, notice how much we could continue dropping. This is important. This support break from this week. This is a weekly support break. It's really does not look good at all. And junk debt, high yield bonds. So junk debt, high yield bonds. I'm gonna show it very briefly. JNK. On weekly time frame. So on below here we have what's called correlation coefficient, this in yellow. By and large, high yield bonds and stocks, they doing the same thing. So I'm going to say that high yield bonds are in this case leading the stock market lower. The bear market for high yield bonds began back in January of this year. We're making lower lows and lower highs, lower lows and lower highs. Big rally here into summer. However, it topped out exactly at my line, at the red support resistance line. That was a short signal. This was a short signal for both junk debt and the stock market. Now, if you also like to look at what's called support and resistance, notice I drew the line through the closes. This is basically a close from June 13th here, and then a low from 21st of September, and we broke that low on 22nd of September, made a new low, bounced towards it. Notice what happened here, 4th, 5th, 6th of October, and so far we held this support break. So junk debt and high yield, or the high yield bonds and stocks, they again move together in lockstep. So it is reasonable to expect high yield bonds to continue lower. We can look at where the high yield bonds are in relationship to pandemic lows, and notice we're super close already to pandemic lows. They're the pandemic lows, and we're really sold off. So again, I don't know if or when we get to the pandemic lows. I don't know if we're gonna hold them, and if junk that doesn't hold the pandemic lows, I think stocks will obviously continue lower. So let's, looking at a estimate of where we're gonna be for S&P 500, it is reasonable to expect S&P 500 to continue lower towards the pandemic lows, and I again don't know if the pandemic lows will hold, but we're looking at like 40% drop towards 2200. That could be not only recessionary, this could be depressionary in nature. Looking at the dollar and other commodities, so here's dollar DXY. So notice what happened. I called this a while back. The dollar broke out here in July of 2021, and it never looked back. The way I just do it is, I look at my chart, I look at the lines. Did the stock close above the blue support resistance line? In this case, did the dollar index close above blue support resistance line? Yes, it did. It happened right there, 13th of July. That's all I needed to know. I don't need to know any other fundamental facts or anything like this. So right now, dollar is again approaching recent highs. Recent highs were set on 28th of September, and it looks like dollar we might again challenge those highs. So let's look at the weekly chart, and there it is. So we're kind of approaching that level of recent highs, and again, I don't know if it's gonna hold, and we might just make new highs. So by extension, I need to know what's happening to the dollar, because we also trade gold, and gold currently is in a downtrend. The downtrend. This is a weekly chart for XAU divided by USD. So there's the beginning of a downtrend on May 29th. On May 9th of this year. Short signal again here on the 27th of June, and new lows on 26th of September. Now we had a bounce this week, last week and this week, and so far not very convincing. So I'm looking at the dollar to see which way we're gonna go. So if dollar continues higher, gold should continue lower. Again, the reason being is because we're looking at this as a currency pair, so it's XAU divided by USD. So if the lower part of this XAU divided by USD is getting bigger, it will pull this currency pair lower. Big news, of course, is oil this week. OPEC surprised many people, unfortunately. Big thing is because OPEC indirectly now is helping Russia in its aggression against Ukraine, because if oil goes up in price, then Russia is able to sell their oil at higher prices and thus make more money, and thus rain down more destruction on Ukraine and threaten the West with nuclear weapons, which is what they've been doing. So it's a terrible situation. The current basically Putin somehow is the originator of all of this, and I'm hoping that he will no longer be a president pretty soon. I don't know exactly how it's going to happen, but I'm hoping that a new government will come in and establish more reasonable attitude towards their neighbors and the world for that matter. But the way things are going, OPEC decided to cut production. So we can look at daily chart. Here's oil and daily chart. So oil broke out above the strong resistance. Strong resistance was at about $88. This is a red line, my red line here, and it broke out above it today with a nice big gain. So it seems quite reasonable that we will continue higher towards this blue support resistance line, which is at 104. At that point, we'll say, okay, we're now in an uptrend. We won't be buying oil. So, yeah, we could be headed significantly higher for oil. So it's weird because we have a recessionary environment, yet oil is going up. So which one will win? Recessionary environment or lower supply of oil? I don't know. Make a comment. See what you have to say. So oil could be headed towards the $100 mark or even higher, and we'll see what happens afterwards, unfortunately. And wrapping things up with Bitcoin. So Bitcoin is currently in a downtrend. Latest opportunity to sell it short was a while back here at around 4,600. If you sold it short, you're 61% richer. Right now, we're really bouncing along the bottom here. So bouncing along the bottom from the 13th of June. And yeah, I don't know if it's gonna hold. So if this bottom doesn't hold, then we can just collapse and go towards zero. Yeah, I don't see anything good about Bitcoin right now. I don't see it rallying. Alright, head over to MasterChartsTrading.com, click on sign up for one of my products. I have two products, two packages. One is trading indicators, the other one is newsletter, and two packages together. The best deal, of course, is to get both trading indicators and newsletters. So again, trading indicators are these lines in the chart, these 4 lines. You can have them on your TradingView.com chart. You only need a free TradingView account to get my lines, and then once you sign up on my site, Master Charts Trading, then you can have the same lines on your chart. I'll open the door for you. I only need your ID. I do not need your password. So some people send me your passwords for TradingView. I only need your ID, and I can turn them on for you. So you can trade on your own. If you want my newsletters, so you get daily newsletter. Actually, sometimes 2 daily newsletters, and weekend we get 1 special video for the members only. And again, this week we will cover these stocks right there. And of course, again, best deal is to get both of them, indicators and newsletters. And if you need one-on-one training, then you can also get that. That's it for this week's recap. Thank you for watching, and have another great trading week. Bye-bye.